Hey guys, so not a really huge week from a data standpoint. We can see that the housing starts are listed as high importance. I would say that's not really that true. Definitely labor markets are always going to be something the Fed's going to look at. But other than that, really not a ton of stuff going on from a data standpoint, except, of course, which we know all too well, NVIDIA on Wednesday is going to be absolutely massive. So NVIDIA is interesting. I'd say 5 months ago, it would have been massive, massive, massive in terms of its impact on markets. But because we've seen a really big broadening out overall in markets, which has been really, really healthy, I don't think it's as important. It is, don't get me wrong, it's still very important, but we've seen a lot of other things happen since let's say early August, late July, and this sort of broadening out has really been the economy kind of starting to participate a little bit more. Just a reminder, everyone, of the disclaimer. So that anything we talk about today is for educational, entertainment, and information purposes only, as opposed to just in those concentrated areas. One to watch, though. Weekly bonds, kind of pushing up against those right here. You can see to the upside. Interesting thing that we saw here is we've got this dark cloud cover. Okay, so what that is when you get a candle day followed by a gap up above the close, but then a retracement to at least 50% of the previous day's candle. So that is kind of an epic fail kind of scenario, depending on how bad that gets, but it's definitely something to watch. So we're seeing that not on the Dow, but in the other indices, we are definitely seeing, look at the Nasdaq. Here's your dark cloud cover, massive dark cloud cover, a reversal on that weekly. This is the weekly. So we had that, of course, smashingly good week with the election and everything else, and then a good give back. I'm a little bit surprised. I thought we would kind of pin around that 6,000 level a little bit more. Thinking that there was a fair bit of gamma around there. So supportive under 6,000, resistance above 6,000 towards that JPM call caller leg. A lot of resistance up there. So, but we blasted kind of down through some important levels. So we'll see. I'm still quite interested in the upside here. So let's take a look at S&P. Here's your daily. Couple ugly days, a little bit of a bounce happening today above this sort of breakout spot. You could almost call that a little sort of breakout spot on the chart there. We didn't get down to the 50-day, which is good, but I'd say we could, if NVIDIA isn't amazing, there's certainly a lot of pressure on that stock to perform, we could get down in here. And then I think we start to kind of march our way back up towards 6,000. Here's your QQQ, a little bit more extreme. We broke through that breakout level that we saw in the S&P that held. Here we've come down, we bounced back a little bit, but by no means would I say these charts are sort of, incredibly good looking at this point. SMH, really, we looked at this Tuesday, Wednesday of last week, and I said, I'm getting out of all my positions, got out of NVIDIA calls, short puts, AMD short puts for a small loss, covered some MUs for almost full profit. So it just kept looking like NVIDIA was the last man standing, and that there was a lot of pressure being put on that one stock. So that finally gave away a little bit. Holding above, but I'd say one interesting thing is it's holding above that 200-day. So I think as long as it stays above there, we've got a fighting chance at a year-end rally. We get down here and we're starting to face some fairly severe damage. And so, part of the problem with that is this kind of chart here, right? You've got decent quality stocks like an AMD, really not looking good. Here's that 9-day EMA that I like to look at. When things are acting well, you're going to see bounces off that EMA. Now we've kind of blasted down through there, and now it's acting maybe as a bit of resistance at the 9 EMA. So I wouldn't get all excited about this little $5 bounce today towards that 140 level. I think we could get a little higher, 142, 143 yesterday, but I think that'll be followed by a little bit of a pullback. Let's take a look at some other semiconductor charts. Here's Micron, definitely below that spot there. This is not a great looking chart. This semiconductor market is really bifurcated, as I've been mentioning over the last couple months. there's definitely the winners and the losers, and certainly seems like Nvidia, being that sort of picks and shovels king, is sucking in a lot of that money at this point. We'll have to see if that continues. I think there's some talk that we're going to go from where we are now, which is kind of a bit more on the analytics side, to more inference, and that other companies can do a little bit better than Nvidia can. So interesting. Be careful. Don't ever feel like, I hear people say you can own Nvidia for the next 100 years. Well, people thought about that with companies like Intel, and the landscape changes, especially in technology. Here's ASML, phenomenal company, a Dutch company that makes these big, expensive chip wafer making machines, and it's really suffered under recent warnings about bookings. So all is not perfect in the world. Certainly not in SMCI, which is just a massive train wreck. But it is important. It's Nvidia's third biggest customer, so it's not insignificant. This still is a thing. So I'm just kind of saying, there are a few little cockroaches out there, and I'm worried that there may be more. AVGO, another real darling, almost making all-time highs, even outperforming Nvidia from an all-time high standpoint, and then really pulling back lately from 185 down to the low 160s. Tesla, a very important stock. So we talk about Nvidia and the whole AI theme, and Tesla sort of touches upon that, and it touches upon a lot of other things, right? And I think it's very important, because look at what it's contributed to performance. 28% of NDX contribution from November 4th to 11th, 28% of that performance, 15% of the entire S&P return in that time as well. So 41% of overall stock options notional, right? So not total volume of contracts, but notional in terms of total value of adding up, say, the strike values. 41%. I mean, that's pretty incredible for one stock, and it makes sense, right? It's you got this Elon sort of friendly situation with Trump. Maybe those egos are going to clash at some point. For now, we're looking at a happy honeymoon. Elon, definitely a great investor. He invested about 130 of his own money to help Trump get elected, ads, et cetera, and his net worth went up about $60 billion. So pretty good investment there, I'd say, for Elon. Now, look at this, option delta by flows. Look at how much money is going into upside in Tesla. I mean, people are really pushing that upside. This is a dangerous name, guys. Don't get too bearish on it. Yes, it can pull back. You can have days it's pulled back 10 to 15 bucks already today, but be very careful, because this is very squeezy. This isn't about fundamentals anymore. This is becoming meme-ish, right? Sure, they have a fundamental business, but this is a company tied to Mr. Innovator. He's into AI, space travel, energy, renewables, robotics, automation, transportation, you name it. He's got his fingers in everything, and now he's got the ear of Donald Trump, and that's a very powerful thing. So let's take a look at option volumes in general. Look at this open interest that expired last week. Pretty big open interest. So if we do, I think we start to make our way up. I'm looking at butterflies. I'm looking at upside iron condors, maybe some call spreads. Keep it simple, but I think we just kind of get this sort of grind up, and we've gotten rid of a lot of gamma lately. So massive expiry. The expiration last week was second highest for November since 2017. So massive notional out of the way now. Of course, that's going to get replenished a little bit. You've got dealers who are going to get saddled with new positions, like cover call sellers coming in, smashing out calls to generate some added income. So that's going to probably push down volatility. So I still like our VIX downside puts, our put fly trade, and I like a little bit of upside in the S&P here. I wouldn't be getting super bearish. Let's look at Bitcoin here. Pretty amazing stuff. Just will not sell off, right? We had a couple of bad days last week, and Bitcoin is just not risk off right now. Risk on, risk off. It wants to make its way towards that $100,000 magnet level. Here's Coinbase skew. Looks interesting. We can see that they completely underestimated the potential for upside. There was really no upside skew built into Coinbase, and sure enough, we went bananas to the upside. Now they've panicked and they've bought up a lot of upside calls. So you can kind of take that a couple ways. Maybe that's a bit of an exhaustion move. They've overdone it, so now everybody's kind of scrambling to create some exposure. Or you could consider that as well. This could be a sign that there could be yet another leg up if we do indeed get making our way up to 100,000. PLT, another interesting thing. I think Powell's commentary on Friday was important. I think that sort of can serve to maybe calm markets down a little bit because he sort of dialed up he threw on his hawkish hat a little bit, right? His hawk hat, and sort of said, listen, we're going to watch things and we're not going to be too eager to drop rates, which is really, I think, what markets need to hear. We're not seeing that big massive bounce today on that. Or indeed Friday afternoon. So we're not seeing a reaction to that. And in fact, the move index is up just a little bit. That's a bit concerning to me because his comment should have been quite soothing to markets and soothing to that rate environment. So we had an iron condor, we took it off for a gain. I'm not putting something on right now. I'm thinking of putting on maybe a condor on the overall market, but not really big on the bond side of things, given what the level of fear that's out there. Certainly brewing below the surface. Something weird is kind of happening. So we need to see that move index coming down a little bit. I'd like to see the VIX back in the 13s again, where it was a few days ago. And then that'll make me feel better about really kind of leaning into that upside in equities, because all these other bullish things, these tailwinds are for buybacks, the CTA buying, the volatility trigger buying, which is getting challenged a little bit now because volatility is kind of bumped up a little bit. Remember, we had nothing going on for about a month, and then suddenly the VIX comes down 5 or 6, and then all hell breaks loose in the stock market. So kind of funny how they've been working sort of inverse to the way that they're supposed to work, right? You're supposed to have a high VIX with stocks moving around like bananas, but instead we had the VIX collapse into suddenly higher movement, right? Upside movement is still movement. So interesting kind of interplay between the VIX and actual stock market right now. So we'll see how that kind of settles out over the next few weeks, and indeed into the end of this week with NVIDIA. So hope you enjoyed that. We'll see you guys in the next video.